Iowa State Extension economist Chad Hart is our corn and soybean market analyst this week. This year, American farmers grew a record soybean crop and the second largest corn crop ever. The U.S. Department of Agriculture's long-run projections, released Tuesday, show 2018's output could be even bigger. The agency forecasted 91 million acres of corn and soybeans, both slight increases from 2017. While the estimates are early and subject to change, we started our conversation with Chad Thursday morning by asking about the economics of corn and soybeans going into the next growing season.
Going into 2018, it's been a bit of a struggle. When you look at 2017, we had better prices at the beginning of the year, but once we figured out how big these crops were, we've watched those prices fall, returns tail off as well, and so as farmers head into the winter season here, they're staring at some significantly lower prices, wider basis than they would usually like to see here, and so that's put the screws on the economic returns for corn and soybeans. But looking forward into 18, the issue is that other crops are still struggling as well. And so we're likely going to see acreage hang around in corn and soybean production as we go into next year.
Do you think that farmers will ramp up soybeans even further?
I'm hearing a lot of chatter about that. In fact, I just got back from a trip to North Dakota talking with farmers up there, and we've watched them expand soybean production greatly up in especially the northern Great Plains, and in talking with producers, they're looking to add a few more acres as we go into 2018 in soybeans. And so, yeah, I do see that pressure continuing to build there.
Well, let's talk about prices, and specifically when it comes to corn, why have prices remained so low for so long?
It goes back to that productivity. When you look back at the last 5 corn years, we've had the 5 largest corn crops this country's ever seen. And so we've had incredible productivity. And what's happened here is we've got really good demand for corn, but we've had incredible supplies the last 5 years. And those have basically overwhelmed that demand and held prices down.
Do you think there's a point where speculators become too short and we can see some short covering, or a point where prices get so low that they see value?
Both of those could happen. In fact, when you look here, what we've been finding is, especially as corns approach that 330 to 340 range on a futures board, that seems to be the price that either spurs on some of the little additional demand or brings those speculators into the marketplace to play. And so we've been finding those support levels. We found them last year. We're finding them again this year. There just seems to be that level as we get into the lower 3s where the market's like, you know what, that demand is still very strong. Let's support the price at that level.
Well, when we last talked, we had asked about your crop condition ratings and the tracking of how that correlated with final yields. How did it end up from your analysis?
From our analysis, what we found is that while the crop did struggle through some times, especially early in the year, what we saw was as the year went on, that crop looked better. We had a great grain fill period across most of the upper Midwest. And also farmers were telling USDA through the season, this crop is better than we were expecting when we started out. And so when we look here, I think it was a case of USDA, the traders, and even the farmers catching up to how good this crop turned out to be.
Do you think there will be big adjustments in January?
I don't expect big adjustments. You're already talking about a yield record here as far as the nationwide yield is concerned. And so I'm looking for slight adjustments here. This crop, like I say, USDA made a big adjustment here in November. I'm expecting January to just sort of confirm what we found in November.
Can you describe just how low basis levels have been?
Sure. As you're looking at basis levels here, the idea is those big crops have led to more and more being stored on farm throughout the year. And when you have a lot of crop in the local area, that tends to create a wide basis. Those prices get a little lower, and that's what's been happening over the past couple of years. And so we have seen basis levels. They eroded in 16. They've stayed down here in 17 because of the very large supplies. And that's going to be a problem as we look forward into 18. We're carrying a lot of both corn and soybeans forward into the new year. That's going to help maintain the wide basis levels we see today.
With that in mind, where do you think selling opportunities exist?
Well, as we look out for selling opportunities, I think farmers are going to have to bust that cash price apart. We're going to need to look at where can we take advantage of some improvement on the future side and catch that basis improving when we can. I think a lot of farmers are looking into the late spring, early summertime. If you think back over the last couple of years, we've had that seasonal rally in the late spring, early summer, usually tied to a weather rally that's offered some really good opportunities for farmers to price their crops.
Do you think South America will have a big impact this year?
South America will. I mean, right now, as you know, we've got through our harvest, we're concentrating on the weather down there, what's the planting progress. And when I look at the, let's call it the market dynamics of both crops, the idea is the markets are waiting for supplies to slow down from somewhere. And so the next place where that could happen is South America. If they do have some weather problems there, that could help create some momentum going into 18 for some higher prices and hopefully add on to that potential weather rally that we would see late spring 2018.
Do exports need to improve, though, in order for a rally of any kind to happen?
They do, but they would be tied to that South American weather. If we see problems starting to occur down there, that tends to spur on our export demand. That's what helped us actually a couple of years ago. If you think back when they started to have some flooding problems in Argentina, that got the export markets a little worried. We did see a little additional buying of U.S. soybeans contra-seasonally at that time. We could see that same sort of thing develop here.